Hey everyone, this is Kirk here again at OptionAlpha.com, and in this video update, I'm going to go over all the trades that we made both on Wednesday, May 3rd, also Thursday, May 4th. First of all, before I start tonight's probably longer than usual video because we're going to be going through a lot of stuff, I wanted to say again a sincere thank you to everyone who replied back and sent their prayers and wishes. Obviously, many of you know last night my daughter had a massive seizure in the middle of actually recording this video update for the trades on Wednesday, and so we rushed her to the hospital, and it turns out it's a febrile seizure, which is fairly common, I guess, in children her age. She's about 3.5 years old, and but needless to say, it was absolutely the scariest moment of my entire life, and you know, my wife's as well. You know, watching your kid pretty much, you know, motionless for about 5 minutes afterwards, and going through a seizure. So I really appreciate you guys' support and love and prayers and everything like that. I can't tell you guys how much it means to me as a father, as a man, and as hopefully someone in this community. The type of people that we have here, it's amazing. And so this is why I continue to do this day in and day out. This is why I tell people all the time that I love this business and I love being part of it with you guys. So I appreciate it. So we're going to get into the trades that we made again yesterday and today. Lots has happened in the market, and I want to go over some stuff. I know we got a lot of questions that people were asking, not only in the forum I saw today, just kind of popping in, but also in all the trades that we have for the market. So first things first, I got off the plane. As many of you know, I actually got off the plane yesterday. I took a red-eye home. Thank God I did, because I was here for my wife and my kids yesterday, so that's a blessing in disguise. But I took the red-eye, got off the plane early in the morning, was able to close out of Apple and First Solar for decent profits overall. First Solar was kind of on the edge. The one that I want to go over here, and let's go over both of these. So Apple was closed out for $170 profit right after the market opened, and again, literally closing these things very soon after the market opened. Apple was a quick one. That was one where the market was basically exactly where we wanted it to be at that moment, right? Apple kind of underestimated earnings, and it wasn't as great as people thought it was going to be, or like the high expectations that everyone had heading into it were definitely downplayed. And so I thought that was a great example of how a stock can actually move way less than expected around the earnings event. And so we saw that nice drop in volatility, obviously helped out. First Solar was one where, again, you have to get out early in the morning. And I tell people this all the time, and again, I don't know why it doesn't resonate, but listen, the best time to get out of these earnings trades is right at the open. Like most of the time, right? Like, yeah, you can give yourself, you might get lucky here and there waiting, and it might come back in and whatever, but like literally just take them off right at the close. There's no profit target. We don't like set it's 25 or 50%. No, it's just, you basically take what you can get. And so earlier in the day, if you got out early with First Solar, you definitely probably either saved yourself some hassle or pain, or otherwise now you have to roll the contracts to the next month, which you can do. It's probably not that far off that you can roll those contracts if you still have them and extend the trading timeline. So basically take your entire straddle, roll it out to the next month, and see if you can get a credit to do so. But again, the key here is just taking these things off early. So we did take First Solar off at $9.34 for a $30 loss. That was great because it was, obviously saved us. All right, so adjustments. We have been busy in doing adjustments. Again, if you haven't taken a look at our adjustment videos inside of track number 3, I'd highly suggest you do that. They're long, they're detailed, they tell you the whole philosophy behind this. The first adjustment that we made yesterday on Wednesday was rolling down our short calls from 123 to 120 in GLD. Again, the whole idea here is just to continue to roll down these options and take what the market gives us. So we're not adjusting the side that's losing. We're adjusting the unchallenged, the untested side, and moving those options in closer. And in this case, we went inverted by $3. So we went inverted on the Siren Butterfly by $3, but our overall credits, including the $57 credit that we took in here on GLD, was more than $3. So in my opinion, that's one of the ways that you should keep looking at adjustments is to make sure that you're tracking these overall credits, right? So we're inverted by $3. And although the profit loss line right now is all below zero, it's not really tracking the profit that we took on this individual position that we rolled down. So it's kind of like deceiving, but we still have an opportunity to make money for sure in this range, like the 119-ish to 124 range. So as long as GLD maybe moves back here in the next couple of days, then we have an opportunity to make money. But this is all we can do, right? This is what you can do in times like this, is just adjust risk, right? We rolled our 123s down to 120. And basically what we're doing is we're shifting risk in the payoff diagram, right? We're taking on more risk on this side because frankly, if GLD moves through here, it's got to move through a profit zone and we should be able to take it off. And we're reducing risk on this side. And that's what we'll continue to do if needed as we get closer to expiration. Now, on that note, we're still 15 days out from expiration for everything, right? So there's still a lot of time here between now and expiration. It's almost 3 weeks of time that we have. It is way too soon. I think a lot of people right now are freaking out. It is way too soon to be overly adjusting these positions. You have to give them time to work out. And 3 weeks is a long time period for the market to move. Anything can happen in 3 weeks. Just 2 days has been, 2 big days in gold and oil, etc., right? So with 15 days to go, we can't be too overly aggressive here. And I think a lot of people are starting to freak out now, and you can't. You have to be patient. You got to be diligent. You make an adjustment, right? You do the strategic thing now that we're inside of, expiration time period around 15 days. You make that adjustment, but then you have to kind of let it go for just a little bit longer, and then we can make an adjustment later, but we have to see what the market does, right? So OIH yesterday, Wednesday, we made an adjustment again, just like GLD, rolled down our 30 strike calls to 28. Now again, this can be accomplished in one single order. You can buy and sell in one order. The system should know, your broker should know that one is to close, one's to open. All we're doing is just moving that strike in, and we're doing so for a credit. So again, we're just trying to reduce some of the premium that we are losing on one side of the trade. So again, with OIH here, let me just go to the Analyze tab so you can see where we're at. This is where we're at, I think right now for the May expiration. Yeah, for May expiration, this is where we're at. So the market is here. So obviously has had a big move. Our position is centered all the way up here around 28, 29, 30. That's about the range that we want to be in. Again, this payoff diagram doesn't really reflect the credit that we have because it's only assuming the positions that are still on are the ones we have. It doesn't take into account that the option that we bought back at 30 was basically a profitable trade, right? But again, it doesn't take that into account. We still want to see OIH move up. There's no doubt about that, right? But we made the systematic adjustment to reduce risk. If needed, we can continue to make those adjustments later on, but we have to give the market a little bit of time to move. And I'll come back to OIH and we'll circle back around with the trades that we made today. The other one that we did on Wednesday was FXE. We had a new position here in FXE. This was a June position centered around 126. Look, nothing different here other than just starting to add more positions. And we did do just one contract because we want to give ourselves room to move with the market. FXE was another one that had a big day up above 106 now. But that June position still looks good. Implied volatility is still pretty good in FXE. And so we wanted to continue to sell premium here. This is that whole laddering technique that we talk about. So we went ahead and sold the at-the-money options at 106 and then bought options out on either end $5 to create risk-defined spread. And that's obviously what we definitely want to do. So Wednesday, again, we also got into a Facebook trade. So this is our earnings trade that we closed out of today, which was wildly profitable. Very good trade. You can see it was here, $326 profit on this. What was interesting about this, and again, I mentioned this to a lot of people, the one that we skipped was Tesla. And we skipped Tesla on purpose because it had low IV heading into the event. Implied volatility was around 40-something, not as high as Facebook, which was much higher than that heading into the event. And so you have to really use that as your filter. I know everyone wanted to trade Tesla, and I think it ended up working out if you got out early in the morning. Clearly, if you waited to the end of the day, it was down big, right? But I think that you have to be diligent about keeping that strict 50 IV rank percentile for earnings trades because that's really how it works out. Again, Facebook is another great example of how a lot of companies, and people get sucked into this, and I see it all the time, and this is, like Facebook, Google, Apple, all of these companies have had this. Tesla, another one that got sucked into this. Everyone's getting sucked into these trades right now. The herd mentality is so strong that I get hundreds and hundreds of emails from people saying that, why didn't we go bullish on Facebook? Why didn't we go bullish on Tesla? The thing is, guys, is that expectations for these companies are so freaking high. And even if they do well, like Facebook did well, Tesla did okay, right? They lost more money, but their revenue was good. You be the judge of that about how much that's going to be a long-term factor. But a lot of these companies just have such high expectations that it's hard to meet them. And so what you have is you have this huge run up in these stocks heading into these earnings events. And then when the earnings come out, they still do well, but that all of that has already been priced in, even more so, right? So you see a lot of these companies, start to sell off afterwards, right? Google has been doing well, but sold off the day of earnings. Tesla was another one that, just did really, TSLA, has done really bad after earnings now. So it's just huge expectations. And don't get fooled by some of this stuff, expectation-wise. So we did the iron condor here. Sorry, I don't know why it says iron butterfly. We'll get that corrected. We did the iron condor here in Facebook. Went ahead and closed out just the inside legs today. You only need to buy back those inside legs. Those are the only ones you're really worried about. And we bought those back for $58 debit. Again, you can see 1 minute after the market opened, we're quick to close and took some money off the table. New trade that we got into today was EWZ. We did a call credit spread in EWZ. This is one that we just wanted to be a little bit directional bearish on this position. So we went ahead and did this a little bit bearish. It's a really high probability of success trade. We did scaled up a little bit on the contracts, did a $2 wide spread. We sold the 38s, bought the 40s in EWZ. Why EWZ? Because we wanted something that's a little bit bearish exposure. I just hate this stock. I feel like it's going to go down. It's been in range bound for a long time. There's no technicals involved on this one. Our portfolio can handle a bearish position and still be very well balanced. So this is just one where I think that this one is starting to kind of collapse. It's had a lot of runs at this 38 level and it's failed every time. And I think that was kind of the nail in the coffin. I think maybe it continues to move lower. All right, adjustments. We also made an adjustment to our TLT position for May. This is only the position that we adjusted for May. June, we did not adjust. In TLT in May, we again rolled down our calls. You can see it's all systematic. There's nothing really like crazy here, guys. It's pretty rigid and systematic. We rolled down our calls from 124 to 122 and moved those in so that we could collect more premium for TLT in May. So this is I think that's actually our June position. This is our May position. So it's still very close to our range that we want to be in. So it's not too far out. And you can see we're starting to now shift that risk, right? So we're adding more risk by rolling down on this side and shifting up or reducing risk on the left-hand side of the payoff diagram in case TLT continues to fall. But we also have a position in June that kind of covers this as well. So you can see our blended position here looks like this. It's a lot closer to these break-even points, which is what we need it to be, okay? All right, and then finally, we added one new position in OIH. I want to spend some time on this one because I think this is really important. OIH has had a huge run down. It's definitely starting to test some technical levels, and so we'll talk about that. But we did add another position to OIH in June. This is why we ladder into position, so that we can stack these in as the market moves down. This new Iron Butterfly is centered around the 26 level. And then we bought options out on either end $4 for defined risk. You notice that these options are pretty cheap the way that we buy them because we wanted, to create defined risk and also to minimize the premium. So let's look at OIH just as a stock or as the ETF itself. Right now, you can see it's had a huge run down. Implied volatility is starting to spike up. But when you overlay the technicals that we use, and again, this is the technicals that come from our signals research, look at how this thing has reacted every time that it has all three of these technicals hit. And this is, again, what we use. We use all three of these technicals have to show that it's oversold. You can't have one that doesn't show. And when it happens, we get these buy-ins. This is an interesting time right here. So look at this huge move that OIH had. Not once during that move until the bottom did RSI end up showing the oversold signal, right? So you got to wait until these things, really line up, and then it starts working a lot better. Same thing here. RSI being the more important one here, the leading indicator, had a really good move off the bottom. And so now what we've seen is not only CCI down, RSI down, and the Bollinger Bands break. So that to me tells us that if anything, it's a more high probability setup than not, right? Not 100%. So you got to hear me on this. All this stuff is not 100%, but more high probability setup than not that OIH will reverse this trade or at least stop the decay, stop the decline. And we use all the time things like EWW is the one that we're trading right now, where we had this, we were using our short only studies in EM a while back. And we got into a position in EM. We subsequently rolled it for the next month. But this is what happened. We said here that, look, EM is going to either stop it's rise or reverse. And this is exactly what happened. And we see this all the time with technicals. It's not that they reverse all the time. It's that the momentum at which they're falling stalls or they reverse. So they trade flat or they reverse. And that's what we see all the time. So that's what we're thinking is going to happen here in OIH. That's why I'm not freaking out, because there's 15 days to go. We make our adjustments, we keep laddering into positions, and we just, basically take what the market gives us. So this is our position for May, right? And then when you overlay our June position is like right over top of it, right? So, okay, if we lose a little bit in May, we can make some of that back in June, right? We don't have to have, freak out about all the stuff that's happening. And we still can adjust May as we get further into the expiration month, right? We still have room to move down our short calls in May. We can move down our 29s to 27, and we can move down our 28s that we just adjusted yesterday down to 27 as well if we want to. But with 15 days to go, you really just have to give the market a little bit of time to move, right? That's 3 weeks. This is a huge move down. You've got to weather the storm. You got to be patient. I know I'm going to come back to this video in like 3 weeks and say, see, like you just have to let it, work its course, let the market kind of challenge you a little bit. And this is the tough part about being a trader is you got to be willing to have the guts and the fortitude to look through this and to kind of trade through these situations. So yes, there's paper losses that you're holding right now, but it's not expiration yet. We're not nearly done adjusting what we can adjust. And so I really think that that's the key message tonight, right? A lot of these things are they're having some good runs down, right? And we've got some money allocated to them. We're totally not over allocated. We have plenty of cash left over. And you've got to let some of these things just, make a quick move lower and try to reverse and be cyclical, okay? So hopefully that helps out. Hopefully that answers a lot of questions I know we were getting through email. Again, just give me time to get through the emails as I, take care of my family and daughter. And again, I really appreciate you guys' support, all the emails, all the prayers that people send. It really does mean the world to us. So hopefully you guys enjoy this video. If you have any questions or comments, please add them in the comment section. And until next time, happy trading.